Most people are misreading XRP right now because the biggest development isn't happening on a price chart. It's happening inside the infrastructure that moves hundreds of trillions of dollars through the global financial system. In the next few minutes, you'll see why institutions like Euroclear and DTCC are quietly building tokenization infrastructure, how XRP fits into a growing multi-chain strategy, and why this shift could matter far more than the daily market noise investors are focused on. See, here's the real story behind the headlines. Right now, most investors are watching price. They're watching resistance levels, support zones, and the next headline that can move the market. But some of the most important changes in finance are happening far away from trading screens. They're happening inside the institutions responsible for settling, clearing, and safeguarding enormous portions of the world's financial assets. And that's where things get interesting, because two of the largest financial infrastructure providers on the planet, Euroclear and DTCC, are actively preparing for a future where traditional assets can move through tokenized systems, not in theory, not as a distant possibility, as a part of a long-term infrastructure transition already underway. Now, this is what most people miss. When institutions responsible for tens of trillions of dollars start changing core infrastructure, the market impact doesn't happen overnight. First, the system changes, then adoption follows. And only later do most investors realize what was actually happening beneath the surface. If you want the satellite perspective on the XRP and the crypto markets, not just the noise, make sure you subscribe to the channel. I break down what's actually happening in a simple way so you can understand the bigger picture. Ladies and gentlemen, why this story is bigger than XRP. Before we talk about XRP, we need to zoom out, way out, because XRP isn't the story. The infrastructure transformation is the story. XRP may be one participant, one piece of a much larger puzzle. And if investors focus only on XRP, they risk missing the structural shift taking place across the entire financial system. Think about how financial markets work today. Most people imagine pressing a button and buying a stock. Simple, instant, done. But behind that click exists a massive network of intermediaries, custodians, clearinghouses, settlement systems, compliance checks, record keepers, legal frameworks, all working together to make markets function. It's easy to forget these systems exist because they operate in the background, but they're absolutely essential. Without them, modern finance stops. And now these systems are evolving. See, the invisible giants of global finance, nobody really pays attention to because it's like watching paint dry on the wall. Let's start with the scale, because the numbers involved here are difficult to comprehend. See, DTCC oversees infrastructure supporting well over $100 trillion in securities processing. Euroclear safeguards more than 40 trillion euros in assets. Clearstream manages roughly $20 trillion. Combined, these organizations represent a significant portion of global financial activity. We're not talking about niche institutions, ladies and gentlemen. We're talking about foundational infrastructure, the financial equivalent of power grids, transportation networks, internet backbones. Most people have never heard of them, yet markets depend on them every day, and that creates an important distinction. When a startup adopts blockchain technology, it's interesting. When critical financial infrastructure adopts blockchain technology, it's consequential. Those are very different things. Write that down. Let that sink in. Because one is experimentation, the other is system evolution. And that's why investors are paying close attention. See what tokenization actually means. The word tokenization gets thrown around constantly, but what does it actually mean? At its core, tokenization means taking ownership rights to a real-world asset and representing them on a blockchain. That's it. A bond can become a token. A stock can become a token. Collateral can become a token. Real estate can become a token. Ownership becomes digital, represented, and programmable. Simple concept, potentially enormous implications. Why? Because traditional financial markets weren't designed for a digital-first world. Many systems still rely on processes developed decades ago. Information gets duplicated across situations and institutions. Records must be reconciled. Transactions require multiple intermediaries. Settlement can take time. Tokenization attempts to streamline these processes by placing ownership records on shared infrastructure, by reducing reconciliation requirements, by enabling faster settlement, and potentially creating entirely new market structures. But here's where it gets interesting and spicy. Institutions aren't pursuing tokenization because it's trendy. That's not what's happening. They're pursuing it because inefficiencies cost money, lots of money. And when you're operating at trillion-dollar scale, even small efficient gains become significant. I want you to think about the Medici Revolution. See, to understand why infrastructure matters so much, we need to travel back more than 500 years to Renaissance Italy. At the time, commerce was expanding rapidly across Europe. Trade routes were growing. Economic activity was increasing. But moving money remained difficult, risky, slow, inefficient. The banking families like the Medici helped create more sophisticated financial systems. Letters of credit, banking networks, improved methods for transferring value. These innovations didn't simply improve banking, they transformed commerce itself. Because when capital moves more efficiently, economic activity expands, trade accelerates, new opportunities emerge. Notice something important? The greatest impact wasn't the money itself. The greatest impact was the infrastructure moving the money. That's a pattern repeated throughout history, ladies and gentlemen. And it's one reason institutions today are invested so heavily in tokenized infrastructure. Not because blockchain is exciting, because infrastructure changes economic possibilities. DTCC's multi-chain future. Now let's focus on DTCC because its strategy reveals something critical about where institutional thinking appears to be heading. Many retail investors still view crypto as a competition. One chain wins, everyone else loses. But institutions increasingly seem to view the future differently. A multi-chain world, different blockchains for different use cases, different participants, different regulatory environments, different asset classes. DTCC has openly discussed building connectivity across multiple blockchain environments. And that's a major signal because it suggests institutions are preparing for flexibility rather than exclusivity. Think about the internet for a second. No single company owns every website. No single provider controls every service. The network works because multiple systems interact. Financial infrastructure may evolve similar. Not one chain, many chains, connected through interoperability. Now, this is what most people miss. See, if institutions truly adopt a multi-chain approach, the biggest winners may not simply be the fastest blockchains, ladies and gentlemen. Let that sink in, write that down. This is really important. See, they may be the network's best positioned to communicate with everything else. See, regulators are moving too. One of the biggest misconceptions in crypto is that regulation always slows innovation. In reality, institutional adoption often requires regulation. Large financial organizations don't operate in legal uncertainty. Ask any compliance officer, any AML officer. No, they need clarity. They need frameworks, oversight, need a bunch of things, standards, and that's exactly what we're beginning to see. See, tokenization projects are increasingly being developed alongside regulators, not around them, not against them, alongside them. This is particularly important because institutional clients demand trust. Banks demand trust. Asset managers demand trust. Pension funds demand trust. Let this sink in. This is so important. This is really it, ladies and gentlemen. I spend half the day on phones communicating with people in this space who swim in the deep waters of the Mariana Trenches. And this is all they care about. Nothing else, nothing more. Truly. See, the technology can be revolutionary, but if the regulatory framework isn't ready, adoption remains limited. And this is why regulatory progress matters just as much as technology and progress. I think maybe more. See, short-term noise, long-term structure. Regulatory structure often determines adoption structure. Ladies and gentlemen, if there is no clear runway to land, the institutional capital will not unload into this. It won't. I harp on certain things, but this is really what's most important. And most people, they don't pay attention to that. A certain type of investor pays attention to that, but that's long-term. So to me, this is the most important thing, I feel. But Euroclear's quiet transformation is just as important, in my opinion. See, If DTCC represents a major pillar of U.S. markets, Euroclear represents one of the most important pillars in Europe. And Euroclear's recent messaging has been remarkably consistent. The conversation is shifting from experimentation to implementation, from pilot projects to production readiness. That's a very important distinction. Pilots are easy. Production is difficult. Production means handling real assets, real regulations, real clients, real risk. Euroclear has repeatedly emphasized three core pillars for the future of tokenized finance: tokenization, digital asset custody, network connectivity. Those three components work together. Tokenization creates digital assets. Custody protects them. Connectivity allows them to interact with broader markets. See, without custody, institutions won't participate. They won't. Without connectivity, markets remain fragmented. Without tokenization, none of it exists. This is infrastructure thinking, not speculative thinking. Infrastructure thinking. And that's exactly why institutions are moving carefully, because they aren't building for next quarter. They're building for the next decade. But the real shift came when Euroclear stopped talking about whether tokenization would happen. Write that down. And started talking about how to make it work at institutional scale. Because once infrastructure providers responsible for tens of trillions of dollars begin preparing for production environments, the conversation changes completely. The question is no longer whether tokenized markets are possible. The question becomes, what does the financial system look like when they arrive? And that's where the story gets even bigger. See, the digital euro and the next phase of money is going to be very, very important. See, to understand where tokenization is heading, we need to talk about money itself, because tokenized assets are only one side of the equation. The other side is settlement across Europe. Institutions are exploring how digital forms of money could interact with tokenized securities and collateral. That's one reason discussions around the digital euro continue to attract attention. A tokenized bond becomes far more powerful when it can settle using digital infrastructure designed for the same environment. Now, this is what most people miss. The future may not involve replacing traditional finance. It may involve connecting traditional finance and digital finance into a single interoperability ecosystem. And that is exactly what major infrastructure providers appear to be preparing for. The 14 trillion euro bond transformation. One of the most overlooked developments in Europe is the modernization of the Eurobond market, worth roughly 14 trillion euros. This market is moving towards full demilitarized issuance. In simple terms, physical certificates disappear and digital records become the standard. That might sound technical, but financial history shows that every major efficiency upgrade begins with digitization. Once assets become fully digital, integration, tokenization, infrastructure becomes significantly easier. This does not guarantee tokenization, but it creates the foundation for it. And foundations are where structural changes begin. I want you to think about the railroad network I always go over. The rise of tokenized finance resembles the expansion of railroad networks during the Industrial Revolution. Railroads didn't create commerce, they accelerated it. They connected markets that were previously isolated. The tracks themselves weren't the destination. They were the infrastructure that made growth possible. Tokenized financial networks could serve a similar role. Their value may come less from the technology itself and more from the economic activity they enable. So as we go from pilots to production, this is really important. Most people don't want to pay attention. I always say this is like watching paint dry on the wall. It is. Most people don't pay attention to the bond market in the continental United States. They think they're paying attention to what goes on in Europe. But for years, tokenization existed primarily in pilot programs. Today, the conversation is shifting towards production environments. That's an important milestone. Pilot projects answer whether something can work. Production systems answer whether it can scale. And scaling is what matters. Institutions aren't discussing tokenization because it's fashionable. They're evaluating whether it can operate safely and efficiently at trillion-dollar scale. That is a very different conversation. Think about the SWIFT revolution. In the 1970s, global banks faced a communication problem. Cross-border financial messaging lacked standardization. The solution became SWIFT. At the time, it wasn't exciting. It was infrastructure. Today, SWIFT supports a significant portion of global financial communication. The lesson is simple. Infrastructure, transformations, often appear slow until they become essential. Many observers believe tokenization could follow a similar path. So you're probably asking where XRP fits into the picture. The honest answer is that the future remains uncertain. What we do know is that the institutions increasingly emphasized interoperability and multi-chain connectivity. That matters because the emerging financial system does not appear to be moving towards a winner-take-all model. Instead, major infrastructures are preparing for a world where multiple networks interact. Supporters of XRP point to its focus on settlement and interoperability. Supporters of other networks make similar arguments. The key takeaway is not which chain wins, its institutions appear to be preparing for a connected ecosystem rather than a single chain future. Write that down. See the interoperability challenge, and this is going on. Creating tokenized assets is relatively straightforward. Connecting entire financial ecosystems is not. Identity, compliance, privacy, settlement, regulation, all must function together. That's why institutional adoption moves carefully. The challenge isn't just technology, it's coordination, and coordination at a global scale takes time. Think about sail to steam, ladies and gentlemen. The transition to tokenized finance resembles the shift from sail-powered shipping to steam-powered shipping. The old system didn't disappear overnight. The new system didn't immediately dominate. See, for years, both existed side by side. Financial infrastructure may evolve the same way. Traditional systems and digital systems could coexist for a long period before broader transformation occurs. So what investors should watch? Not financial advice, just my own opinion and retain any capacity. Investors should focus less on daily price action and more on infrastructure milestones. Watch regulatory developments. Watch production deployments. Watch institutional adoption. Watch tokenized asset growth. These indicators reveal whether the system itself is evolving, because ultimately, infrastructure determines what becomes possible. See short-term noise, long-term structure. When historians look back on this period, they may remember it as the moment financial infrastructure began moving towards a digital future. Euroclear, DTCC, central banks, regulators, all exploring how tokenized assets can operate at institutional scale. Will every blockchain succeed? No. Will adoption happen exactly as enthusiasts expect? Nobody knows. But the conversation has clearly shifted from speculation to infrastructure, from pilots to production, from possibility to implementation. And that may be the most important development of all, because while many investors focus on price, the system itself may already be evolving underneath. If you enjoyed this breakdown, be sure to like the video, subscribe to the channel, and let me know in the comments. Do you think the future of finance will be dominated by one blockchain network, or will a multi-chain ecosystem ultimately emerge? Thank you for watching always. I'll see you in the next video. Hope everyone's having a great day. Some of the most important things I think right now to pay attention to after going over this is where markets are moving. I want to welcome all the new members of the Crypto Public Desk Monthly inside the Patreon, all the new members of the membership channel. You got to understand something right now. This is the most important thing that I think to pay attention to. Coming from the situation that I learned on the floor of the New York Mercantile Exchange, working for the exchange, as exchanges open up around the world in different places, no matter what size they may be, this has the ability to change things. The recent development with Singapore, them launching something over there, is important. See, I pay attention to this because as we traded physical gold, platinum, palladium, and silver door bars that we would take out of the ground to state-run refineries, we always wanted stamped LBMA gold good delivery bars. So as that whole infrastructure that was once dominant changes, everything else around it will change. So I'm paying attention to that. Ladies and gentlemen, if you want to learn how to trade, if you want to learn how to invest, if you want to learn how to take advantage of everything I'm talking about, come and join the Crypto Public Desk Monthly. One solid tip in the pits can easily pay for your entire year subscription. So if you want to see the deeper macro research, and everything that we take advantage of and why, this is where you're going to learn. Come and join over almost 600 active traders and investors who are taking advantage of this. It doesn't matter if you're new or a seasoned trader and investor. I just watch more and more places begin to basically change how they're doing business. That's the most important thing. And as you watch those things changing, that's a roadmap. Because the East, the BRICS, the unit, and the West, they're on a collision course. Everybody's jockeying for position. How it turns out, nobody's really going to know. I have my own views. None of this is financial advice. This is my own opinion and retains any capacity. See, my own views of this are very different. Being a financial mercenary, and for the people that taught me this business, there's some lessons that I hold to be like the commandments of investing. And following them enables us not to get caught up like sushi. And that's why I say we're the remora, feasting on the sushi, under the apex predator. As more systems create and evolve, the world will continue to trade and change, trade and change. Why I say this is because the world is changing. If half of these exchanges existed when we were first developing concessions over in Indonesia, we would have traded with them. After trading with Logamili and Tam, we would have went with them instead of straight, COMEX or the LBMA. But they weren't around. They are now. So when we're looking to offload platinum, palladium door bars, we have a lot more options now. So I'm comparing these exchanges opening up, and in other videos we went over the platinum exchanges opening up in China. The world is changing now. Blockchain is here. You can't stop change. You can't be a Luddite here. I think, again, this is just my own opinion, and anyone takes any capacity, that to not be in position is more dangerous than worrying about that I get the best price point. Because whether this peace treaty or MOU holds or not, time goes by. The bell rings open, the bell rings closing. It matters what you do in your positioning to take advantage of this. I tell you that we key off of the Widowmaker in Asia. I tell you we key off certain things. But I believe as all this goes on, the financial world must evolve. And the people who take advantage of the evolution often capture the most money, or at least protect their investment portfolio, not financial advice. But that development over in Singapore, that's massive. And you'll see all the big players go into that. Again, see, I expect more chaos in the financial markets coming. I expect this only because the first time in my entire financial career, and all the people that I work for and who taught me and the things that we discuss, the commodity boom is being sucked up to build for the future. So I'm not in the camp that this is some asset bubble. I'm not. There's some people who are in that camp. I'm not in that camp. I'm looking at this straight financial war. That's what I'm looking at. Again, what do you think it's going to cost to build AI centers in space? How much metal? Where's it going to come from? I'd love to hear everyone's thoughts in the comments. See, when I outlay it like this, the demand to build these is going to be enormous. It's not going away anytime soon. See, there's not enough metal in the ground to build some of these things. There's not. But development's going to keep going. And if you have the capital to build it, it will appear. So when you realize this, that is the next big thing that we think, and I'm telling family offices and sovereigns and funds that have retained us in our organization and capacity, because there's going to be business between Earth and the moon. So the military will be on the moon. That's 100%. But there'll be business in between. And mining at some point is going to be done in space. It's just going to. Looking at this, the opportunities to take advantage of all of this are unbelievable. That's why XRP, ICP, HBAR, they're massive, ladies and gentlemen. XLM is important too. I've made some videos on that. It's just not one of the pole positions I think is super important. I don't. See, if you're looking at how much capital you have to put into different things, you have to make decisions and building a portfolio that makes sense to you. Ladies and gentlemen, if you need help to learn how to trade, to learn how to invest, or if you want to learn how to trade and you want to learn how to invest because you can do them both at the same time, do come and join the Crypto Public Desk Monthly. Join almost 600 active traders and investors. Doesn't matter where you're at in your journey. Just matters that you start. The most boring opportunities and trades usually make the most money. None of this is financial advice, it's my own opinion, and it retains any capacity. AI is not going away. It's the biggest trade and investment of our generation, not going away. 47 years old, and I will have a conversation, would love to have a conversation with anybody who thinks that the AI is a bubble. Revenues potentially could be a bubble, but the commodities that it's sucking up, that's not a bubble. Because it's demanding everything besides home construction, consumer. It's just sucking everything up. It is. We get phone calls every day for people looking for offtake agreements with us, yet everything that we oversee, produce, is spoken for many, many years. But I'm blown away by the actual companies calling us. They're calling the companies. And I laugh because the world's changed and they're not going to tell you this on the news. You know, why I say that, don't get caught up like sushi. When you follow hype, I don't think it's based in any kind of fundamental logic. I always tell you, I'm not a crypto influencer. We're financial mercenaries. It's a big difference. I don't know how you influence anything. I just like influencing my bank account and my clients. That's all I influence. Nothing else, nothing more. It's not financial advice, just my own opinion, and it retains any capacity. I say that over and over again, and you don't want to invest because of a YouTube video. The world is changing. It's not going back to what it was. The demand to build will continue. These data centers are not going away. I told you that the AI war was a kilowatt war. I told you who we were involved with certain projects. I told you how you'd win by putting them in certain places weeks and weeks ago. If you're actually still here in these videos, I salute you, and you're getting so much free knowledge because knowledge is free. You just have to know where to look for it. And you have to know what you want for yourself. See, if you don't have a plan of where you're going and why, makes no mistake about it. The mistake you'll make is not trying to do something better for yourself. But these things need metal. Most people don't understand how to run a physical concession. I remember the first concession that I was taught on. Patrick, rest in peace. I know you're in a place now where Tottenham always wins. Man, did I learn a lot when we were in Papua New Guinea. I learned a lot in Malaysia. I learned so much on developing concessions and running our own concessions that, you're not taught this in school. It's not from a video. You learn on the job. You learn doing it, putting the hard work in. There's not enough metal in the ground to do what everybody wants to do. There's not. Once you understand that one fact, this one fact, you get Gucci conviction, Gucci clarity. And as we drink our frosty beverage, which I'm enjoying right now, going up this frosty mountain, you understand that this will continue to keep going because China's not going to back down. The United States is not going to back down. Everybody needs the resources to build data centers. SpaceX doing its thing. They want to build AI data centers in space. Where's the metal coming from? It's got to come from the ground. So that doesn't take into any consideration the other metals and amounts needed to build for houses, consumption, everything else. You have too many ideas competing over too few resources. Ask yourself this, right? I know some people think a lot of the AI companies are overvalued. That's why I'm so bullish on ICP, and I love ICP so much. It is a pure AI play. Why I'm so bullish on XRP. So bullish on XRP. It's intertwined with everything. Seeing how exchanges work, working for exchanges, from getting hit in the head with cards, being a reporter, running the pits before doing everything else on my own, working for some and clerking for some of the biggest names, because everyone wanted to be friends with me because of my uncle, the Merc. You learn a lot of things. The only thing you need to try to do every day is make better decisions in the markets than you did yesterday. Have your plan, your goals, your weekly goals, your monthly goals, your quarterly goals. Have your motivation up in front of you on your desk. Maybe you want that villa in the tropics. Maybe you want that special sports car, that boat. You want to buy your parents a house. You want to pay off debt. I don't know. That's up to you. Visualize what you want. You'll make better decisions. I give a big salute to everybody working a second job to be able to buy more assets. You got that conviction. We started this channel and the Wolfpack here to give back, because we don't work, our organization doesn't work for retail people. We work for institutions, funds, governments. We don't work for regular people. I love you all. As always, none of this is financial advice. This is just my own opinion in any capacity that retains us, not financial advice. The world is changing. I think it's what a time to be alive. I hope peace prevails. Don't get drowned out in the daily noise and the chaos. Don't do that. Don't run after trades. Don't run after investments. Write a plan out. Have your desk organized in front of you. Have your watch list of what you're looking for. If you want to see what our watch list is, come and join the Crypto Public Desk Monthly. We're having our first Zoom call on Sunday for all the members of the Crypto Public Desk Monthly. Make sure that what you're doing makes sense for yourself and your family. Don't overextend yourself. Don't do that. Don't invest because you're watching YouTube videos anywhere. Don't do that either. Just know that the world is changing. See, I learned not to get cut up like sushi by having margin calls, 7-figure margin calls early in my career on the floor of the Mercantile Exchange. You learn discipline from that. But I love making these videos and being here with everybody when I can. Have a blessed evening. Stay safe. Don't get cut up like sushi. We are the wolf pack, because the wolf's not the mightiest animal in the jungle. But we're not doing tricks in the circus. We are the remora because we're feasting on the sushi underneath the apex predator, the sharks. That's the name of this game. I love you all, ladies and gentlemen. I'll see you tomorrow. None of this is financial advice. This content is for educational, informational purposes only. Always do your own research. Never invest solely on a YouTube video. With that being said, ladies and gentlemen, I'll see you on the front lines. I love you all.